Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and in today's video, we're going to talk about liquidity in the housing market that's absolutely vanishing across the spectrum. So we'll cover liquidity disappearing and vanishing for investors, for buyers, for homeowners, and we're going to talk about the current impacts the lack of liquidity is having currently on the housing market. Now, you guys know that I am on vacation right now, so I'm going to do this video. I'm gonna kind of take you guys through a journey. What I'm gonna do right now is go get some coffee, go take it down to my camp. Right now I have a bunch of buddies that are shark fishing on the beach, all catch and release, all conservation. Thought what I would do, y'all, is I'd start my video out at my Airbnb. I'm actually staying in Airbnb because Airbnb actually started to feel the pinches of the credit tightening and the liquidity crisis that's going on right now. But really, you guys, what I wanted to show you is look at the rules. Okay, so here's the thing with Airbnb. It's starting to cost as much, if not more, than hotels, and we have to pay an outrageous cleaning fee, you guys. So in the Airbnb I'm staying in right now, I pay $250 in cleaning fees, and look at all of these rules, you guys. I'm gonna switch this and show you. Look at, I got all these house rules. Look at this, all these house rules, and checkout instructions, and it's all this. Look at this. Is that crazy? You know, and there's signs that are posted everywhere in here, y'all, so it's just crazy. And one of the catalysts to getting more inventory, because we do want more for selling in the housing market. Once we have more for selling, obviously we'll have more inventory. With more inventory, the housing market will be more balanced. But either way, you guys, that's going to be today's video. And if you guys can remember, I'm not a financial advisor. I'm just a normal person that's on vacation right now that wants to talk a little bit about the housing market. And for this effort, you guys, for taking you guys out here in the tropic, okay? And I actually may go down there, but I really want to get to my crew to give them food. But I may take you guys down there. The beach is actually like right down there. So this is just, you know, this is where I have come to figure out what I'm gonna do next in the housing market. And just to clear my head, I kind of just really felt stagnant. And honestly, you guys, for me, what it did as a content creator, what really hurt is when the government bailed out the banks. When that happened, I was like so discouraged, and I really needed this vacation. So already things are going absolutely wonderful. But let's get this party started. I'm gonna go get some food, I'm gonna get some coffee, I'm gonna take it to the crew, and we're gonna start talking about the lack of liquidity. Breakfast sandwiches on board. That's what you get when you work with my team, and I always take care of my crew, you guys. That's what a good crew should do. But I want to talk now about, let's talk about the investor side of liquidity. Now, first of all, what we have to understand is how big the housing market is. So it's really important that obviously that the housing market functions properly, that more debt is made and liquidity is there. So obviously more loans can be written and people profit and the world goes round. So investor liquidity is super duper important for the growth of the housing market. But let's remember where we're at. Now, remember what is going on with Blackstone right now, also BlackRock. But Blackstone, which is one of the biggest residential investors as far as real estate, residential real estate and rentals, is absolutely suffering. Not only are they suffering, it appears that Blackstone, again, one of the biggest investors in real estate, is having massive liquidity issues, and they've actually limited the withdrawal on certain investment funds. Now, obviously, they're limiting the withdrawals because they're having trouble accumulating enough money to maintain that account. So really amazing to see that the liquidity issues is actually starting at the top. And that's what we're really seeing here. We're seeing that the rich are essentially getting hit first with the liquidity issues. And also, I'm not saying that the poor are not getting hit. I'm just saying that obviously, you know, from what I'm saying, it's starting with the rich. This is a rich people's crash or recession, and you guys have heard me saying constantly it's going to start there. So obviously talking about investor liquidity issues is really, really important. And why is talking about investor liquidity issues important, y'all? Because we need way less investor demand. If we have way less investor demand, we won't need as much inventory to have a more balanced housing market. But investors right now, absolutely crippled right now. Again, people are just so freaked out. And really the issue here, guys, is the home values are squeezed dry. The liquidity and values of houses, listen to me, the liquidity and the values of houses right now, it's just squeezed dry. They have squeezed all of the juice out, and really, essentially, most consumers, not all, consumers are on to this, right? Like, we understand, like, hey, I see what you did to your house. That house, that's not real. It's overpriced. we need investors to stay out of the market. So not only is their liquidity drying up as a result of all of these recent bank runs, and you guys, we may add another 4 or 5 bank runs to the bank failure list before I even make it home. Now, all of these bank runs are creating additional liquidity issues because they're gonna tighten up credit. And when they tighten up credit, it's commercial financing, and that affects many investors down the line, including home builders. Now, unfortunately, what the Fed did is they did the discount window, and basically they bailed out a whole bunch of lenders, and they bailed out some of the new home builders as well. Again, that's why I'm saying, y'all, I'm so frustrated with the quantitative easing, but I'm also thinking, you know what? Maybe it's okay that they bailed out those banks as long as the Federal Reserve keeps us on this path for long enough for the liquidity in the housing market to reset. Let's talk about the buying liquidity crisis right now, which I would argue is actually a really good thing that buyers have a liquidity crisis right now. Now, I'm not gonna really touch on this part of the video about credit tightening and the effects that current credit tightening is having. I'll get through that later on in this video, but I wanna talk about what's going on right now as far as with buyers and the liquidity issues. You guys can see, you see that gate right there? Unfortunately, I'm gonna have to walk all this food through the dunes. I think you guys already saw that with my last video, but I'm gonna have to go around, and I'm gonna have to, because this gate isn't open yet. And actually drive on the beach. This place is just so amazing. I don't know how well you guys can see. This is a new rig. Hopefully my audio is good. Hopefully my video is good. But let's talk about buyers, and let's talk about what liquidity, you know, is drying up with buyers. Now, obviously what happened here is the Federal Reserve raised interest rates. And by raising interest rates, it really evaporated many buyers' liquidity in the sense that they've been priced out. So the number one reason right now, and this is actually a federally induced thing, both with prices and interest rates, things are so unaffordable. Many people no longer qualify to even purchase a home. And it's very important that new people come into the market to purchase homes, because that's how the ride goes around, right? People need to continue to purchase so that lenders, title companies, realtors, escrow companies all continue to profit. So when we see this type of liquidity crisis going on right now, but yet we started this year out with median sales price going up and, you know, basically people purchasing again, to me, that demonstrates that there's another category of buyer, okay? There's your local buyers, which the liquidity crisis is worst with any of the like natives, right? Like especially in Phoenix, Houston, that liquidity crisis is massive because normal people that could like 2 or 3 years ago afford a house, right, qualify for the loan, they can no longer qualify because now what has happened is what's called debt to income ratio. Their debt to income ratio has exploded, and it's really important when you guys get obtained to financing to have a very low debt to income ratio. That was one of the tools the Federal Reserve had as far as doing something about what's going on in the market. So it's good. The liquidity crisis is something that we want because look at what's happening. We can't rely on people to stop buying, right? People are still buying. And I'm not even talking about like current homeowners, and we'll talk about that in a minute, and the lack of equity. But right now, massive liquidity crisis going on, and I hope, y'all, I really hope that that will continue to increase. But it's gonna be hard to see this impact continue until most of the excess savings is gone. You guys know in some videos, we still have about $1 trillion in excess savings. Now that's plummeting rapidly, but as a result of that excess savings, that's kind of a lifeline into the housing market. People are able to draw from that liquidity, from the COVID liquidity, versus like normal fundamental liquidity, right? Normal house values, normal financing, and things of that nature. But again, part of the liquidity crisis, part of the liquidity that's vanishing up in the housing market, thank goodness y'all, is buyer liquidity in the form of unaffordability. Now let's talk about the current liquidity issues with current homeowners, okay? Now I really think it's important to make the clarification that there's greatly different levels of homeownership and qualities of homeownership. The liquidity issues for people that purchased homes are generally different if they purchased prior to 2022. So we'll talk about those differences. Right now, you guys, I'm about to go walk down those dunes, and actually I already showed you that. I had to put on my work boots real quick. Take a look at these guys. These are my work shoes right here. You guys can see how this is all ripped up right here and right there. That's actually from wrangling the sharks. The sharks have such tough skin that if you don't have these boots on, it rips you apart. And you guys know it's all catch and release. We're not killing any of the animals, but I thought you guys would be interested in that because that is what I absolutely love to do, to basically just get away, reset, meditate, and things like that. So I'm gonna take you guys, down to my camp right now. Let me grab my stuff real quick. Okay, obviously breakfast. You guys know I always try to take care of my people. So let me get up here real quick. I'm gonna have to go through this dune, through these dunes, get to camp, and I'll show you guys what my camp looks like. Maybe I don't know, but maybe I'll do my conclusion of this video, kayaking in the open ocean, because that's what I'm about to do. As soon as I'm done here and I get through this, I'm gonna start kayaking shark baits. But anyways, back to the subject of this video. You guys remember the dunes? Look at this, look at what I'm walking through. Isn't this just amazing? That's why I'm always telling you all, have the right mindset. Life is absolutely beautiful. Helping people's beautiful. Loving people's beautiful. All this petty nonsense, I got to do better with it. I know that. But let's start with the liquidity issue of people that purchased a home prior to 2022, because their liquidity issues are going to be much different, way different than people that purchased, homeowners that purchased after 2022. So in a nutshell, people purchasing prior to 2022, most of them, okay, like a huge percentage, should have really low interest rates. And I was actually looking at data. I think there's about 30%, y'all. It was like 30 or 40% of people with mortgages have a rate under 4%. So I'll probably do a separate video on that because that's really, really crazy. But here's the thing. All of these people, they should have a tremendous amount of equity and they should have a low interest rate. But the problem is, and this is why so many sellers are not listing their houses, so many sellers are not cashing out, because they're basically trapped in affordability, meaning that if they sell right now, they're gonna have to be part of the rat race. If they sell, they're gonna have to buy an overpriced house. If they get a mortgage may be 6 or 7%. A lot of these homeowners feel like they really can't sell their house to begin with. They can't even feel the equity because they understand, like, yeah, it may be really nice, and trust me, it is really nice to have $100,000 in equity, but if you can't access that equity because you have nowhere to live, and you can't even if you had somewhere to live, if you can't afford to live somewhere else, then the equity is completely useless to you. And in fact, not only would the equity be useless to you, right, if it's your primary residence, you can live there forever, it's actually gonna work against you. How? Property taxes skyrocketing because of assessed value, and homeowners insurance skyrocketing as well because of increased value. So needless to say, liquidity is a massive issue with current homeowners. Now, the liquidity issue is way worse for any homeowner that purchased after 2022. Because think about it, you guys, more than likely, a lot of those people, the recent purchasers, they're not even going to experience equity growth for potentially 5 to 10 years. So really buying a home right now, it's not a slam dunk. You're not just gonna automatically get a great deal. The biggest at risk of being caught up in the lack of liquidity, all of the recent buyers. And think about it, if they're trapped in their house, they can't even sell. There is no liquidity. You need liquidity to be able to refinance your house or even sell your house. And these new homeowners, they don't have that. The recent purchasers of real estate, they're paying the real price for all of this, I'm telling y'all. And that's why, again, I've decided to step out of the housing market. I would prefer to own something once the balance is back out, once there's way less dust in the air so I can figure out what's going on, and once normal liquidity comes back to the market. This whole roller coaster ride of liquidity, it's broken people. It's broken people, and it's broken the system, and it's really, really ugly. You guys are seeing this in the data as far as new listings. You're seeing it. We're all seeing a huge lack of new listings because the sellers, again, they don't look at their home values as true liquidity because they can't go anywhere. And I'm almost done with this part of the video. I just love going through the dunes and then boom, open ocean. I can see my camp. I think everyone's still sleeping. This is really, really amazing. I'm gonna turn here and I'll show you guys and then we'll move on. No one on the beach, look at this. Isn't this just amazing? The water clarity is dirty. We want the water to be clearer when we go fishing. Fishing is just a lot better. Let me pan here, look at this. Not a soul on the beach, look at that. It's almost like this beach is all to myself to figure out what's gonna go on next, what's gonna happen, what's the best thing to do. You guys can see too in the background. Do y'all see my camp? It's hard for me to see through this window, but that's my camp over there. So I'm gonna go drop off the food and let's move on to the next part of the video right now. Now let's talk about credit tightening. Now obviously credit tightening is going to dry up liquidity probably the fastest. And I'm gonna go into a couple things that I think is gonna happen to the future, and we'll go into what's gonna happen right now, because we've been hearing a lot of rumors and news, you know, from various media sources that credit is tightening up. My rod is about to go off. Look at this, guys. Let me show you where I'm at real quick. So here's my fishing rod, just to give you guys an idea of what I'm doing. This is how big it is, okay? Just to put it in perspective. All right, I love that. It's rattlesnake skin, looks like wood, all gold, way out there, okay? Anyways, so I may do a kayak, you know, do a kayak thing. I'm gonna walk over here just because I think that, I don't know, I think maybe those waves are a little bit noisy. But credit tightening, y'all. Credit tightening, and I've been saying this for the last few months, is something that I believe, and probably in the Federal Reserve, Jerome Powell believes, is what needs to happen. The rates going up alone, so far, it's been effective, but I believe, you know, as a result of a few other things, it's proving not as effective as we start 2023. So in addition to the higher interest rates, one of the things, again, effective, tighter credit. When credit tightens up, what happens, y'all? Less people can qualify to purchase a home. So the entire economy is based on debt, is based on loans, right? So when the liquidity dries up, that's why we see so many things break, right? And we'll see a lot of things break in the future. But credit tightening, very, very good. It's what we want. Some of the things that they can do that they haven't done yet is lower the DTI, debt to income ratio. It would essentially price more people out without having to continue to raise the interest rate. So you can price more people out by limiting the amount, the maximized debt to income ratio. Now, unfortunately, you guys, we've heard rumors of this happening, obviously as a result of the massive banking crisis and liquidity problems right now. I mean, liquidity is so bad in banking right now, we actually have bank runs. You know, not as bad as 1929, but we have bank runs right now because banks don't even have liquidity. Liquidity is vanishing, it's evaporating. That's what quantitative tightening is, which is why so many people, including myself, were upset when they did the quantitative easing to prevent additional bank failures and to calm everyone down, because by giving that type of liquidity back into the market, a lot of people are gonna take advantage of that. Again, my concern was the new home builders, and they're gonna prolong the problem. And I think, again, that is a factor on why the housing market has slightly rebounded, that quantitative easing that's going on. But nevertheless, as of right now, we haven't really seen major implications of credit tightening happening in residential mortgages. Credit tightening right now, massive credit tightening going on in the auto, used auto, massive credit tightening, and also commercial real estate. So massive credit tightening, but we need to start to see that in residential real estate, which it's been modest, okay? So fast forward, after all the banking failures, all the rumors of credit tightening, it's not a lot there yet. In fact, you know, and I actually kind of uncovered the new credit, you know, the good credit tax. That actually is a form of credit tightening for the average home purchaser. The average home purchaser with the 720 credit score and less than 20% down payment is gonna pay about 75 basis points more to get a loan. So that is a form of credit tightening. Nevertheless, you guys, when credit tightens, liquidity vanishes with the credit tightening. And pay attention here, we're seeing most of the credit tightening start and most of the liquidity issues start with the rich, with the upper level of society. So very, very interesting to see the rich get hurt most. And here's the thing, you guys, that actually could be probably brilliant, because if we start getting inventory back right now and the rich were still wealthy and they didn't have liquidity issues, they would be buying all the houses that came back on the market. So the fact that before we have, like, you know, I believe before we have an additional price decrease, more and more of the rich and investors will continue to get hurt and basically have their liquidity vanish. And when more and more investors and institutional investors have their liquidity vanish, that's going to help people like us get back into a housing market that's more balanced, for us to find a deal that we love for a great deal. And that's how real estate should go. we are buying. Buyers, inherit the liability, right? We're paying hundreds of thousands of dollars. When you pay hundreds of thousands of dollars for something, you should be picky. You should take your time. You should get incentives, not go in through some bidding wars working with like clown realtors. I mean, this industry, y'all, and you guys see, this is why I'm so passionate. I've been doing this for so long. It's just really dark. It's just really dark, okay? And it doesn't have to be this way. People, especially realtors, make so much money, y'all. But anyways, guys, that's about where we're at right now with credit tightening. You guys see those houses? So I walked all the way down. Darn, now I gotta walk all the way back that way. All right, guys, so I'm gonna try to do this last scene, kayaking in the ocean here. I'm not sure how well this is gonna go, considering I don't wanna get my camera wet, and I don't wanna get wet because it's really cold. But we're gonna talk about how we know that there's current liquidity issues. So we're gonna talk about, what we're seeing right now that is basically showing us, these types of issues, because we have data sets now that are telling us, yeah, there is liquidity issues in the housing market and it is vanishing. Now we can say the issues are overpriced houses, but I'm gonna look at it from a different aspect. But I'm gonna try to enter the water here and not get messed up, because you gotta battle through the waves. It's not just a lake. All right, let me try this right now. I don't like this. See? The waves just got bigger. I don't think this is gonna go well for me. Oh, because I need both hands to clear this. Oh my gosh. I'm gonna try right now. I'm gonna try. Okay, I made it. All right, I made it. So we could do the next part of the video. Oh, wait a minute. Hold on. There's still waves crashing. I gotta get out of this danger zone. Hold on 1 minute, I gotta put the camera down. Okay, so that's a lot better. So I'm in open ocean right now. You guys can see that. And I have to be really careful because there's a sandbar right here and the waves break on top of the sandbar. Let me actually, all right, I'm just gonna stay here. But watch behind me because a wave may come and knock me out of the kayak. But here's the thing, we already know there's massive liquidity issues. Not just because of the run up. We're starting to see the liquidity issues hit the industry, right? Like industry professionals, like mortgage, realtors, title companies, escrow companies. Sales have absolutely tanked. And as a result of, the lack of profit, the lack of liquidity, obviously the housing market and the professionals, they're taking an absolute beating, y'all. So, this is a big wave right here. Okay, I'm gonna clear that. The thing is I don't want the wave to break on top of me. But this is no guessing, right? The thing is, the thing that's a bummer right now is, the crashing, the reset, the balance, whatever we want to call it, it's taking longer than we would have wanted. The reason it's taking longer than we would have wanted is the excess liquidity. Quite frankly, there was too much liquidity, which is why the Federal Reserve has turned it off right now. And not only have they turned off liquidity, they're also saying to us potential home buyers, we may want to pause, let the housing market reset. And by reset, you can assume that they're talking about more inventory, more options, and obviously prices that are grounded in fundamentals. Regardless, across the board, across the spectrum, and everyone right now is losing because of this liquidity. People that are poor, people that are rich, normally when we have crashes, good things come with the bad, right? Investment opportunities. But right now, everything is just bad for everyone. And again, because we had too much liquidity, and now fast forward to today, y'all, we're now paying for all of the liquidity of our past. Now, other than that, you guys, do me a favor, seriously, I'm way far from my camp. I'm drifting down the coastline right now. Like the video for me coming out in this kayak for you guys to finish out this video. Like the video, you guys. Thank you for just following along with me in this journey. You guys know I'm looking for my primary residence. I am out here struggling, but that's okay. It's okay to struggle, y'all, but we still need to make the right decisions. Now, obviously, as always, you guys, let the data find the deal. And if you're out there investing in real estate, I wish you luck, and I hope you win.